Hey traders, welcome back. So today I want to talk a little bit about cash versus futures, specifically in spread betting. You know what it's like, you log onto your platform, depending on what platform you're using, you say you want to trade the FTSE 100, what comes up? Cash, futures, various different expiries. How do you know which one to trade? So let's try and address that now. Now, what I'm going to say, should I say, is that cash versus futures is different in the underlying. The way the futures contract is calculated is different in the underlying market compared to how they calculate the cash in the spread betting. Let me explain that. So if you want to trade the FTSE 100, okay, you've got the current cash price, which is calculated. It's the official index value, the kind of value that you see in the newspapers and stuff as the official closing price or the official opening price of the FTSE. That is calculated by the group of FTSE 100 stocks. They're weighted by market capitalisation. So ones that have got a bigger market cap have more weighting on the index. And that's all put together in a formula, and out comes the current calculation. And that is updated every few seconds, the official cash price. Now the futures price is based off that, but there's different parameters in there, from time to expiry, the interest rate, things that will give you a price based on the cash, based on how long is it to expire, the interest rate, and all those kind of stuff is why the price is different. However, you can trade the futures direct in the market. The code for futures in the market for FTSE is Z, for Dow it's YM, for S&P 500 it's ES, etc. You can trade the actual futures, and that is based on the value of the cash, but with this formula applied depending on how long you're going to hold it for, what sort of expiry you've got, all that kind of stuff. Now, we don't want to get into too much depth about that. What we want to talk about is the difference between cash and futures and spread betting. Now, you may think, okay, cash, I can just trade the cash price in spread betting. That's what it's called. It's called a cash price. Unfortunately, you can't trade the actual cash price because the cash price updates every few seconds. And you would be able to sit there and say, okay, it's going to move now, I'm going to buy it, and then it updates, and then it updates, and it updates. So you're not trading the actual cash. What you're trading is the futures price, but it's been adjusted to give it a level that is almost like the cash price. So let me explain that. If we've got here, the cash price is currently at 7,000, the futures price is currently at 7,100. Okay, the market moves up, all the stocks move up in the next kind of minute, and we get the futures price moving up to 7,105. The cash price doesn't even move yet because it hasn't had a proper stamp in there, so the official cash price hasn't moved. Then we get sort of 10 seconds later, or however long the increment is, it comes up and it says 7,005. That would be in line with what's going on. However, in between that timestamp, we've had a bit of move. Might have moved up to 10, might have moved back down. So you can't actually trade this price. What you're trading is this price. However, when you look at the quotes on your platform, the quote says for the FTSE 100, let me write that down. For the FTSE 100, it says 6,999 to 7,000. For example, right? So you say, okay, that's the current cash price. Then if the futures price moves up by 5 ticks, they will synthetically create an artificial cash price. So they'll say, okay, that's moved up by 5 ticks. The current price on this now is 7,005. The current price on this is 7,004, and it will move in line with the futures, but it will be adjusted to represent a cash, so that people like you and I coming in and we can relate it to the current cash price and say, well, the FTSE is currently trading at 7,000. I want to trade the FTSE. That doesn't make sense. That's too expensive. Okay, this is the current cash price at 7,000, but it moves in sync with the futures because they're more of an accurate representation of the current value of the cash. Okay, so how does it work in terms of spread? So the spread, they're literally making this synthetic product for you, which they're calling it a cash. And this is why, interestingly guys, they can't call it the FTSE 100. They'll call it the UK 100, or they'll call it the US 30, or they'll call it the something, because it's not actually the FTSE 100. Yes, the underlying is the FTSE, but it's not the actual FTSE. It tracks the FTSE. The most important thing for us as traders, something to point out, is that the chart of the cash that we're trading on the spread betting platform will be exactly identical to the chart on the futures, except the value will be different. So if the futures is doing this, up, down, then the cash will be doing exactly the same, but it will be priced down here. So you can imagine my drawing is not that great, but that is absolutely identical to that. So the if you're trading the cash, you're trading the FTSE, but it's a synthetic price. The chart will be exactly the same, so you can do your analysis on it. It gets adjusted when the futures roll over. That's something for another topic. Roll over on futures will be adjusted to suit, because all they're doing is creating a synthetic value based on that immediate revaluation of the index. And that's the same for anything that we're trading out there, guys. Crude oil, gold, S&P 500, NASDAQ, any of the kind of stuff, apart from stocks, of course, which are not based on a futures contract. They are based on an actual value of the stock at that time, and they can just give you the mirror of the price, but they'll just add a spread for their own profit, which makes sense. All right, guys, hope that makes some sense. Go and check out some more links on Google and dig into it if you want to find out more about it. Specifically, if you want to find out how futures are calculated, there's a formula to how they're calculated, and then you can put that into this mix and work it back to how it affects your spread bet. But the main theme is we're trading cash products. It's a synthetic product, but it tracks the futures identically, but it's just realigned so that it makes sense for us in terms of how much the cash value is of the index. So if you like this video, guys, give it a thumbs up. Please subscribe for more videos from me and others on this channel. And if you have any comments below, I would love to hear them. Let me know your thoughts. Take care, guys.